Okay, welcome everyone. We're going to get right into the stock market technical analysis. Going to use the charts to be our guide. Hopefully we can make some money and we'll get right into it. Again, everything on this channel is just my opinion. Everything is just my analysis. I'm not a financial advisor. So what I'm going to cover today is we got the Fed out of the way, and so now the market has an opportunity to really digest what the Fed said and where it thinks the market's going. So what we'll do is we'll just go through some various charts and trade ideas. I'm going to start out with the tech sector. Apple reports earnings after the bell today, and Apple is the largest company, so it will move the market. Most likely, the way Apple works is they always beat earnings because they're able to sell bonds, buy back their shares. They have massive share buybacks, so their EPS looks always better than expected. They've got kind of have that game down. But what's their forward guidance look like? And that's where I think we really need to pay attention after we hear those earnings. Now, triple Qs, as far as I can tell, if I look at the hourly chart, we're trading basically at some support right here at about 342.50. You can see on the daily chart that's some former resistance, and we came right down to it. It's holding support so far. Now, one thing, though, that's kind of interesting is it does look like we're flagging a little bit. If I go to the hourly chart, you can see we're kind of bear flagging right now, just starting to crack below that flag. So we'll see how that plays out. I'd look for impulsive selling. If this flag's going to continue to break down before Apple earnings, then, maybe that is a sign that Apple's going to report bad. But kind of flagging out a little bit. So I'm kind of watching that to see if it starts to break down. If it starts to break down, I'll likely just take it short. Even though it is before Apple earnings, the chart will, it is telling me that Apple's going to come out with bad earnings. So that's what I'll be looking for. And then that flag, if you look at right here, let's go back to the daily. It is forecasting that we probably sell down to about, well, it depends on when we actually get there, but about 325, we'll call it, on a breakdown of the flag. And if you look back on the weekly chart, or really on this daily, but if you go back, this is your bull market trend in the tech sector. That's really going back all the way to 2009, 2008. And you can see that would be that red line. So we're breaking back down to that, the top of that trend. We'll probably get a reaction there. But I think it's probable if we're going to continue to break, we could easily break back within this trend, within this channel, all right, on this downside move, and probably come down to the bottom of the channel sometime in the near future. All right, I am actually thinking that is probably where this thing's heading, is down here at 258, 260, somewhere right in there. Okay, one to watch though is Apple. All right, because they have their earnings, and you can see as I zoom in, they're kind of flagging out as well. Apple's kind of flagging right here, a bear flag. And so what this is telling me is that here's your flagpole, and here's your flag, and you take the continuation, and it's forecasting, the projected target's about 145.50, and that makes sense. We have a bearish rising wedge pattern. We broke to the upside of the wedge, and we've now failed and come back into the wedge. So it tells me we have a high probability heading straight down to the bottom of the wedge. This is where we'll likely bounce, but that's the target for right now, and I like it. I think that's what's going to happen after earnings. The S&P 500 has that same kind of flag. So if I go to the hourly chart, you can see we're just kind of flagging here, starting to break down on the flag as well. So watch those cues. I wouldn't expect it to break down before today. I think it's likely if going to break down on bad Apple earnings. But the S&P 500 is starting to break down right now. So on the daily chart, that's going to, the target on this one is a potentially big target. So you've got this big flagpole right here, and it really sets us up for a pretty swift continuation move all the way down to about 397.68. And as I roll out, just, right about down to here, looks like there's a small gap right in here. So I would say anywhere from that, about 400, we'll call it. This flag looks like it's projecting for us to fall down to 400. from the high to the low, if we were to fall down to 400, we'd be down about 16.5% on this move. So that's where I think we're heading. Again, we need to see these flags resolved to the downside. I think it's likely going to come on bad Apple earnings with a gap down tomorrow. The financials, XLF, has that same flag. So if I go to the hourly chart, you can see here's your flag. And you can see we're basically starting to break down again, already breaking down. So we'll see where we close out the day. Maybe this is just a short little brief dip and then they're going to rally it back up into the flag. But, I suspect if we're towards the end of the day here in the next hour or so and we haven't recovered, then that's telling me that we're likely continuing to the downside. Projected target on this one is also a pretty steep fall. And that would basically be... drag this down, somewhere right in there at about 35, maybe down to this key area. Yeah, right about there. We'll just move that down and say about $35 as the projected target. So again, if that happens, we're going to have a lot of these things under the 200-day moving average as well. The XLF will be below the 200 days. So a lot of damage will be done in the charts, and it's, if we see this, it's going to tell me that we are indeed starting that bear market that we probably would have started back during COVID, but the Fed stepped in and stopped it. If the Fed's not there and they're stepping out, then likely we're going to start that bear market. Okay, gold. So gold sold down on the Fed news yesterday, and I talked about possible scenarios. We were right there at resistance. And they traded right up into there right before the Fed. So I was saying, okay, we might break out on the Fed. Or, if they want to sell gold down, then we'll get rejected and we'll likely sell down to support right there at about 1790. And that's exactly where we're at right there. So that is support. This is the area. This is the buy area, basically. And if I roll out and you look at the weekly chart, this is basically the bull market that gold's been in since 2018. So you'll see all the tags of support, and as I zoom in, we're right there again. So again, the other pattern that you really have to pay attention to is this triangle pattern right here. So see how the highs are getting lower and lower and the lows are getting higher and higher. We're kind of coiling. So everybody knows this. It's pretty obvious. See that we're coiling like this, tighter and tighter. We're pretty much at the apex of the coil. So it's decision time. Where do we go? One thing I think that might play out if we see tech continuing to sell off, I think gold is going to rally on that because of the implications that it's going to really hinder the Fed. They're probably going to have to start to walk back some of their hawkish talk if tech sells off in a meaningful way. So maybe that's what's going on. Again, we'd had bullish divergence on the weekly. You can see, basically that's your divergent low. So we have bullish divergence on the weekly chart. So if I had to, and I am positioned in gold miners, but I would guess it's going to break to the upside. And when it does, I would expect in pretty short order, we're going to get to these all-time highs, 2074, and probably have a small reaction here, maybe something like that, and then off we go. Okay, that's long-term stuff because I'm on a weekly chart here. We need to see the breakout. And if I go to the daily chart, we just need to see which way this is going to break. One thing you might want to keep on, we might break to the downside, stop short, and then reverse and break out. They do like to play games like that. So keep an eye on something like that. If it is going to break down, it should be pretty impulsive to the downside. And if it's going to break up, it should be pretty impulsive. And the dollar is rallying. Pretty big move in the dollar today. It's 78, almost 0.7%, breaking above the highs. So strong move in the dollar, and it is a divergent high. So let's keep an eye on that. You'll see here clear negative divergence right there. We're making a new high in the dollar while we have negative divergence. Not fully confirmed yet. So as I zoom in, you'll see that this divergence has not crossed above the zero line, and also it's pointing up. I want to see this start to turn down like that, and the RSI, I want to see it start to turn down. If we get that in the RSI and the PPO, then we will have a confirmed negative divergence, meaning that this move right here is likely going to fail here pretty soon. So that would be consistent. If we see this fail, then I'd want to see it break this trend line right here on the dollar. This is coming off your May, kind of late May 21 time frame. And if we break, then that's going to be your sell signal in the dollar, and you're likely going to see the breakout in gold at the same time. All right, couple trade ideas, individual stocks. Lyft, this one's about played out. We have a gap right down here and really good support at about 32. You'll see that we are, let me just kind of scroll that out. You'll see that we are at gap entry, once again, 34.83. So we recently hit gap entry. We bounced off of that, and we're right back down at it. So I think we're going to break and run down and fill that gap at 32. Okay, so again, that's the trade idea that I've really pointed out. I'm going to cover my trade on that gap fill, or once we run down into that gap, we'll be covering the short trade that I had on, and this one will pretty much have played out at that point. Okay, this LPX looks good for continued downside price action. You can see here on the daily chart, we've got an upward trend line right here. Made a new high when we were rallying back here, but this high was a divergent high. See the big negative divergence? So you've got a new higher high in price, higher than the former high here, but much lower momentum. That's big negative divergence. So then we were watching this trend line right here, and there's your sell signal. We got a break right there. Fell right to the 200-day. We bounced a couple times against resistance backtesting, and now we're starting to break. We're below the 200-day. We rejected. Everything looks good for more downside. So I've got a target on this one down at $50, about $49.90. And this still looks pretty good. We might get a small reaction here at $58.88, but I'm thinking we're heading down to that $50 in pretty short order. So I like this one, and I'm short this one. Okay, SeaWorld. This one looks like it's about to break to the downside. You can see this key level of resistance was 57.87, right in there. And then it basically became support. So support here. And then we recently hit it again. We're kind of sitting right on that support shelf, but we've got negative divergence. And looks like the market's about to break to the downside. So I expect this one to get carried down with it. The 200 days right below. I think we'll probably break both of those in one move. So I still like it to the downside. We also, if you look, we had an this is the March 2020 lows, clear upward price trend. Broke trend, created the secondary trend right here. So support, we held support all through here, and now we've broken that as well. So that's a sell signal right there. We're just kind of consolidating. I think we're continuing to the downside on this one. Tesla. So big breakdown today. I shorted this thing yesterday before earnings because it looked like it was going to break down. And again, if you guys are interested in learning all about this, check out my course. I explain all these technical analysis concepts and how to basically use the tools of the trade. Link in the description below. Tesla here, big negative divergence right there. No, actually, I'm sorry. I take that back. We didn't quite get the negative divergence. It's just not quite there. This was a lower high than the former high. Didn't quite get it, but we have an upward price channel right here to watch on the daily. So we kind of created the secondary price channel. We broke it just recently, so there was the breakdown, and that's actually a sell signal. Came back up for a back test into that just yesterday, and this is where I shorted it. I shorted it into that back test, and today earnings came out and they're just smashing it down. The other thing to notice, let me kind of clean this up a little bit. The other thing to notice, look at the break. So this was your former high right in here at back in January of 2021, and it's about 893, 900, somewhere right in there. And, that was your former high. We broke above the high, so there's your breakout above the high with a big gap. So that's a nice impulsive breakout. You broke out, you ran up, you came back in, tested it from under or from above, held support, continued higher, came back in, tested it, and boom, we're breaking back down. So false breakout. This is a bull trap, basically. All this action right here. This is bull trap action. And again, the negative divergence told you in advance that this breakout here was likely going to fail. And then there you go, down 10% and pretty much just completely selling off. We got the 200-day down below. It's likely going to get a reaction there, but it could slice right through the 200-day. Ultimately, I think we go a lot lower in Tesla. It does look like we're breaking down. So I've got some support levels along the way, which will act as profit targets or price targets. 550, 555, we'll call it. Another one down here at 460. And, so we'll evaluate those for now. But in the short term, I think this one's pretty good. 550, right there. It's about 550. Just connect the two lows there on the daily chart. It's about 555, we'll call it. All right, that's what I got on that one. I like it to the downside. Okay, IYR, this is a real estate sector ETF, selling off today down to support again. So you'll see here, we got our sell signal. Here's your upward trend line on the daily chart coming off the March 2020 lows. All right, up here, that's what's your divergent high. See the negative divergence right there? So you got a divergent high, negative divergence on both momentum indicators, and we got a sell signal pretty much right there. That's your sell signal. It's about on January 18th, and it's been down ever since. So we've been falling to support. We held there at the 200 for just one day and then broke, and you got support right there at 101.66. So you'll see that we already hit that. It's kind of hard to see, but on Monday we ran down, we gapped down there and hit it and rallied off of that right into resistance and then back down at it now. So we should fail here. I think we're going to break this level and head down to our next level of support. I'm going to have to mark that out. Okay, I kind of marked it out. We got a little bit of support. This is your pre-COVID range here, and a little bit of a reaction there. So I think we'll probably have a little bit of support right there, about $100. You break that, and there's not a whole lot of support until you get down to about right in there it's right about there at roughly 90, 89.50 or so. All right, so there's some next levels to watch. All right, Qualcomm, looks like there's more downside. In fact, we look like we're flagging out, but the key things to watch here, you got a big gap right here on the daily chart. So that's the target, 139 to the downside. Big negative divergence on the RSI and the PPO. So again, all these little highs, that popped up were divergent highs with a high probability of failing. We had a support level at 171.50, broke. So our sell signal came right there. And I shorted this thing a little bit in advance because the market looked like it was about to break, so I got ahead of it. And then over the last week, we've just rallied into resistance and failed. Rallied, failed, rallied, failed. Little slight pop, but they failed it. And we are flagging. So if I look at the hourly chart here, I can probably mark out something like this. And it's a bear flag price pattern. So you've got the flagpole. If I go back to the daily here, you've got a flagpole like this with the flag, and it's basically projecting, it's somewhere in the middle of the gap, but I suspect if we get down in here, we're going to run down and fill this gap, or at least get close. So that's where this looks like a good trade to me, and we have, we'll probably get a reaction at that gap. We've got really good support here at 123. So I think even if we get a reaction at the gap, we're probably going to head down to that 123 level. But maybe we hit the gap, backfill, and then break down to 123 in the future. I like it to the downside. Okay, Clorox CLX is at long-term support. So I want to point that out on the weekly chart. You'll see here, basically, this is your long-term trend line going back to 2011. And we held support back here in 2018, and we just hit it again right there in 2021, rallied off of that, but we're back at support again. So, I don't see any divergences on the weekly. We are at long-term support. This should hold. One thing that gives me a little bit of pause, though, is the fact that we just hit this support. We rallied. The rally was pretty muted, and then we're right back down at it today. right back at that support. So if the market's going to break and we're going to go into that bear market, even these things are going to get dragged down with it. They might get dragged down a little less than some of the other stocks, like the growth stocks, but these defensive plays, which is what this is, will get dragged down as well. So I'm going to watch this trend line. It is support. You could buy it here with, down at this, basically right at 162.50, a couple bucks lower, and put a stop below, and just see if that works out. And that's all I got, guys. So leave me a thumbs up, and I'll catch you on the next one. Bye.